Hey everybody, this is Nate Smoyer, and you're listening to the Tech Nest Podcast. This is the show where we sit down with the leaders in real estate and technology to find out what they're doing to transform the way we buy, sell, and invest in real estate. If you've got an interest in real estate and technology, stick around. You're in the right place. What's up, everybody? I'm so pumped for you guys to listen to this episode. We've got Stefan from InvestReal. Now, first, I have to apologize. I tried saying his last name here, and I kept getting it wrong. I'm so sorry, Stefan. So please forgive me. He runs a company called InvestReal, and it's a really interesting play. Now, as a lot of you know, building a marketplace can take some time, but anybody can build a marketplace. But what they have done is they've built a marketplace that's based on top of a lot of data, a lot of census information, a lot of consumer sentiment, some AI, some machine learning, and it's specifically to connect developers with investors focused on opportunity zone investments. It doesn't get any much more specific than that. It's very timely. There's, a tight time window here for these big opportunities that exist. So if you're not familiar with opportunity zones and opportunity zone funds, and then you want to know how you can take advantage of them, you do have to be an accredited investor to leverage InvestReal, but what they're providing investors is quite remarkable. And I think as you hear this episode, you'll really hear the value that Stefan is aiming to deliver, not just on the financial side, but also on the social good side. So sit back, relax, enjoy the show. Well, hey, Stefan, welcome to the show.
Thank you. Pleasure to be here.
Yeah, man. Well, I appreciate you taking the time, setting aside to talk with me about opportunity zones, InvestReal, and all that you have going on. Because, everyone's totally clear about investor opportunity zones. I mean, we all know all the details and everyone knows all about it. So
Absolutely. It's like all the regs are out. Everybody knows all the details on the regulations. You go in an event, you have like specialists. Everybody's a specialist because there's nothing to be a specialist on.
It's so crazy. This year, everyone's a specialist in opportunity zones. And early last year, whenever it was crypto and tokenization. Yeah. Before we go too far in here, I think we're going to have a good time. Let's get started the right way. Please let everyone know who you are and what you do.
No, absolutely. So Stefan Schimenes, I'm a serial entrepreneur. I built multiple businesses in my life. One of the things I've been involved very early on, which a lot of people would know, is Airbnb. So I was a person in charge of the international expansion of Airbnb to Latin America, and a person in charge of basically growing the business out there. So a lot of traveling in my time over there. Imagine like a big region, very fun experience. As a serial entrepreneur, I had to keep on building businesses. So I built after one of the largest online ad networks in Brazil. And during the time, I was actually investing in real estate with my own money. But being a tech guy like I realized that during the time I was investing, that real estate is the largest asset class in the world, but one of the least sophisticated in terms of utilizing technology as an investment thesis. So with that idea in my mind, I actually decided to build an investment platform with myself and a few friends with our money, where we would basically invest in real estate almost as a quant fund, where we were literally buying properties across the country using algorithms. So let's just call it AI with all the let's just call it machine learning, all that stuff.
Yeah, we're going to get into that.
Yeah, exactly. So but then opportunity zones came to play. And the interesting thing about our technology is we were actually tracking assets and neighborhoods. And when we're talking about neighborhoods, we were tracking them on a metro area, zip code, and census tract level. And the reason we were doing that is we needed to understand the impact that the neighborhoods we were investing, we're going to ultimately, what would be the impact of the neighborhood in our assets. So we were looking at things as how, what is the quality of life of people live in the area? Is the quality of life accelerating? Meaning, is it do we see the quality of life improving? What is the risk of buying properties in those areas? So we had all this technology ready. And when opportunity zones came to play, we're like, oh my gosh, we've got all this technology that's based on the census tract level, and opportunity zones are census tracts. And through our system, anybody can just click through clicks away and figure out which opportunity zones they want to be in. And also, I built multiple marketplaces in my life. Airbnb, the one before, had built a marketplace before, and the one after. So I was like, when we saw the law and the way it worked, we realized that there's going to be a lot of direct investment into real estate, meaning an investor has capital gains and he will actually have to invest directly into a real estate asset. Or on the other hand, you have a lot of capital chasing deals, but there's a big mismatch of information in the market, meaning there's a big opportunity to build up a marketplace connecting investors and developers in the opportunity zone space. So therefore, we decided to create InvestReal, leveraging our technology that we had before to connect investors and developers in the opportunity zone space, and using the data to allow investors and developers to understand if those investments actually make sense or not. So a month ago, we created InvestReal as this opportunity zone marketplace, and now we're here.
It's a small feat, fantastic timing. I'll tell you, no, that's amazing, because obviously you were working on something that was going to carry a lot of value. And I love when I hear stories of, hey, we built this thing because we were trying to do this and no one else was doing it. So we just built this thing. And it wasn't like, how do I sell software to investors? It was, okay, well, we want to accomplish this. So let's build the tool. And then you had the fortune of opportunity zones kind of screaming at you saying, hey, your product fits it's like the perfect timing. Because how long did it take you to develop the tool?
So, well, as you know, technology, it's not ready yet, and it will never be. So we've been working on it over 3 years. Multiple aspects of the business. The first part we started was really understanding properties. So we were actually tracking properties on a cap rate basis, all automatically. So any property would prop it on the market. We would analyze what would be the projected cap rate. Through that, we would just decide and buy a property or not. And then so that was the first piece of our technology. And then, as I mentioned before, we had to analyze, we first look at it as cap rate is very important. And we actually saw that it's a good way of measuring real estate. Then we realized, okay, the income of an asset is only a piece of the story. We actually got to look at the risk of the neighborhood. So that's the second technology that we built after. So it's almost two phases. The one is looking individual assets. The second phase is looking the impact of neighborhoods in the assets.
Got it. And you must have, not just the neighborhoods, but if you're factoring cap rate, you're factoring in maintenance costs, if there's building management, capital investments for improvements. Those are big things. And especially that spans, if you're looking at a fourplex versus 100 unit, there's obviously economies of scale, but there's also bigger, complications with stuff like that. So how many different points of data are you pulling in to make those calculations?
Well, in the technology we were using, we had to focus. So we were focusing on, on residential real estate, multiple data sources. Exactly. So we were looking into what is the rental rate, what is the management cost, what is, all those kind of things. So it was a big system. But now on the opportunity zone space, through our marketplace approach, we're mostly focusing more on the individual assets, because building a software to measure all the opportunities inside opportunity zones, it's just going to be a tremendous amount of work. Looking at hotels and then multifamily and then logistics centers and trailer parks and all those things. So right now we're really focusing on really trying to understand, instead of looking at the individual asset, we're really trying to understand the impact that the neighborhoods will have on the opportunity zone space, and really looking through the lens of the people that live in there. Looking through the lens of, do we see movement? Do we see shift? Do we see growth on the market? Because the difference from what we were doing before, we were buying properties on market. This is opportunity zones, ground up development or redevelopment. So it's a completely different business, right? So right now we're really trying to focus on that part of it.
Yeah. And I'm certain that there's probably plenty of building owners, who, if their buildings are sitting in opportunity zones, they may have owned them for some time.
Absolutely.
They might not have been doing anything with it. Who knows if they're even winning on the depreciation values, and they don't even know they're sitting in an opportunity zone.
There's a lot of that. There are a lot of developers that come to us and say, oh my gosh, I was going to raise money for my development project and I had no idea it was an opportunity zone. Those are actually the best deals. Those are the deals where the developer figured out the math works without the opportunity zone. And actually that's how the industry should work. Nobody should invest in an opportunity zone project because it's in an opportunity zone. People should invest in a project because it makes financial sense from the impact that it will have on the returns of the investor and the impact it will have on the society. Let's not forget about like the objective of the opportunity zones is actually to create social good, right? There's also a big part of the program. But first, you got to look at the returns of the project, impact, and then if everything is good, like the benefits of the opportunity zone, that's just the icing on the cake.
Yeah. So let's talk real briefly here. Opportunity zone funds. Can you give me an overview? What is an opportunity zone and then opportunity zone fund?
So absolutely. So opportunity zone is something that was created at the end of 2017 by the Affordable Tax Cuts and Jobs Act. And basically in the law, there are a few pages, I don't know, like 10 pages, and they're saying about like opportunity zones. And basically opportunity zones is something that is a federal law that allowed states to elect low-income census tracts to be part of a program called the Opportunity Zone program, where basically anybody that has capital gains, has realized capital gains, can reinvest those gains into those low-income census tract areas that were deemed opportunity zones and receive tax benefits through that. So the first benefit is, let's say I've got $10 million of capital gains. I realize, so I sell my Airbnb stock, like Uber or whatever it is, I have $10 million of capital gains. So let's just say instead of paying my taxes right now, I'll be deferring my taxes payment all the way to December 2026. That's right. The first benefit. So you get a tax deferral. The second benefit is you get an increase on your basis. So from your original investment, if you invest this year, you get a 15% increase in your basis. And the third benefit, which I believe and I think the majority of the industry believes is the best one, is if you hold the asset, if you hold your interest in the opportunity zone for 10 years, you're exempt from paying capital gains on that given company. So it's
that is insane, because how much money across the nation do you know of that's been raised for these opportunity zone funds?
Well, like there are a lot of numbers out there. It's hard to grasp how many people are like Steve Mnuchin, like he says that he believes $100 billion will be invested in on it. I believe he's lowballing the number.
I thought it was $1 trillion.
Yeah, that's what he's saying. Exactly. There's six, like the numbers are like
10x on it. Just 10x it. You know, I got a 10x button on my desk here. Let's throw a number out. Let's put 10x that.
That's like, if you look at the numbers, we're talking about like there's some studies saying there's $6 trillion of unrealized capital gains in the U.S. $6 trillion. There's in the U.S. only from individuals, like just people like you and me and all the billionaires out there, there's roughly $800 billion of realized capital gains per year. And you're not even taking into consideration that like Apple can sell bonds, take the capital gains from selling your bonds and build a data center inside an opportunity zone and still be a part of the program. So
that is brilliant.
Exactly.
That's so brilliant.
So, you know, like, so look into that amount. Yeah, like, well, they should do it. So it's really a big part of it. Like and what, by the way, the program is not only it's not really only to real estate. It actually works for companies as well.
Right. So you can buy a business in an opportunity zone, right?
Exactly. You can build a business inside an opportunity zone. So let's just say, and there's still like this, like we're still waiting for the second part of the regulations to come out and try to identify where does the income recognition comes for businesses. Because like there's a law in there saying like you got to have 50% of your income inside of the opportunity zone.
Right.
But, you know, like we've been, you know, like I was just in 2 events with the person in charge of the regulations on the IRS, like Steve Kolonsky, and he was like, we understand that the businesses need to sell to the world. You know, like they understand that it's not going to be, you know, like a pizza parlors. Like they understand it has to be a business because those are the businesses that generate a lot of jobs, right? Like, so the ultimate objective of the law is actually to, and I think this is one of the coolest things about it, is like literally taking money from people that don't pay taxes because they're not selling their assets because they just don't want to, because they don't want to pay taxes, and say, hey, by the way, sell your asset, take that asset and invest in a low income area where you're going to, you know, like, and as you and I, we all know, real estate development is a major economic driver of job creation and, you know, income and wealth creation. That's like, that's what happened when on the crash in 29, you know, like Rockefeller's like, hey, like people need jobs. I'm going to create a Rockefeller Center and create thousands of jobs through that. So that's basically the objective of the law. And I think it's a really great incentive. And the beauty of it, it's not really bureaucratic. You just literally type a box in your tax return saying, I reinvested my capital gains into an opportunity zone project. That's it. It's self-certified. So
you don't have to go through an intermediary and do a 1031.
No, you can do everything. You can do directly. You can build a partnership, yourself and your spouse, take your capital gains and invest directly into an opportunity zone project. The only thing you need to do is like check a box in your tax returns that you invest in. Of course, I'm just getting like the big picture. There's some details in there. Like you have
my wheels turning here and I'm like, wait a minute. Maybe I've overcomplicated this. We should probably put it at this point in the show that none of this is tax or legal advice or advice. Please go ahead and consult your trusted neighborhood professional for that.
Absolutely. We got all kinds of attorneys in a Rolodex. We got like from the most expensive attorney that you want to a cheap, high quality attorney. So if anybody wants referrals, you can come to us. We got a lot of referrals. We're not making any money out of it. It's just because as in a marketplace, like we got those connections. Exactly. No tax. Like I can say a lot of things are wrong, but yeah.
Yeah, that's how I like to do it. I like to give advice, look like I know what I'm doing, and then I just tell someone, hey, as a disclaimer, I don't know what I'm doing. So
Exactly.
I just stayed at the Holiday Inn last night. So one of the things that I think is interesting about the opportunity zones, and you brought this up earlier, and maybe this is something that, gives you guys, like makes InvestReal a little bit more of a valuable product, is a lot of these opportunity zones was based on dated census data. So it wasn't like they took 2016 information and designated these zones. They were working with data that was a few years older. And, when I looked at opportunity zones in my area, first off, I couldn't believe there was any in my town because, we don't live, there are no bad neighborhoods in this town. Some people who think there's bad neighborhoods in this town, but they are good neighborhoods. They are better than anything I ever grew up in, for sure. So, I look at them like, oh, okay, so that's real. Like that makes the opportunity that much greater, like that much, elevated. So I'm curious, with some of the data that you guys are, being able to put together and visualize, how much more of a leg up is InvestReal giving investors if they weren't using a tool like that?
Well, absolutely. So, we got to divide the spectrum of people investing in opportunity zones into completely different spectrums, right? You've got like, first of all, rural and urban, right? Like you can build farms in opportunity zones. There's like this guy we met, he wants to do a pistachio farm in opportunity zone in California. So like you've got those kind of projects.
Pistachios are gaining in popularity.
Exactly. With millennials and, all that stuff. And it's a long-term crop. I had no idea. I talked with a guy, I had no idea it takes a long time to build up pistachios. And
so I know does it.
Exactly. So it's like 10 years holding period. So it kind of matches all the process with the law. So, you've got those kind of things. And on the other hand, you've got like urban, a lot of people, I'm just going to use New York, which is a very well-known neighborhood. Like if you go like to Brooklyn and Williamsburg and Dumbo, it like a lot of those areas were deemed opportunity zones. And the reason is it's like they actually used 2010 census data. Mm-hmm. And by the way, the thing is, the way the law worked is the states had to elect the census tracts, but they had like a very short amount of time to elect a bunch of census tracts. And they had the challenge of figuring out, first of all, I got to elect the census tract that first will actually bring dollars in. I just can't pick the worst of the worst. It won't be developed because otherwise the program is not going to work. Like they want dollars to go into it. So they had to select areas that actually will have some interest from the investor perspective. So that's the first thing. And so they had old data. So we look at our platform, we see opportunity zones with an income of like income per capita of $100,000, and those are opportunity zones because in the past they were basically poor areas that have significantly developed. So you do have already those areas which we like, let's just call it that have already gentrified. Like those areas already are in a process where like they almost become established neighborhoods. So an investor that wants to go into an established neighborhood, of course, that investor, he's not really betting that much on the appreciation. His investors say, okay, the area is already pretty expensive. Property values are very expensive. I'm not going to get a lot of appreciation. I might get some, but I'm probably not going to lose my money. On the other hand, you got the investor that say, hey, I want to be in Brooklyn where Brooklyn was 10 years before. So I want want to be in the whole like growth markets. I want to be in markets where the income is very low, but all the other indicators tell me that this area is about to explode or is in the process of exploding. And by the way, there are 8,700 opportunity zones in the entire country.
Which one's your favorite?
They're all my favorites. I'm just kidding. Like it's
where should I put my money?
Exactly. So like, for example, you can have amazing growth. There's so many markets where we see tremendous amount of growth, and that's where our data comes to play, like, and what do we see growth? So like investors can come to our platform and just literally click 3 buttons and we will tell them and rank them opportunity zones according to their investment profiles. So, if I want to be an investor, say I want to be in the next Brooklyn, I want to be in areas where I have like low quality of life, but I see a really increasing quality of life trend scores, where I see like there's a lot of gentrification, where there's income growth, where there's job growth, where there's young people coming into it because, I want populations to grow. So I can literally go into my platform. Everything I mentioned, someone can go to my platform, click in buttons, and we will basically rank all of those, and we'll tell, okay, this is the neighborhood you should be on. So, and it could be from neighborhoods in Cincinnati to Chattanooga, Tennessee, like it like literally.
Like Chattanooga, I shopped a lot of Chattanooga. I didn't have much luck as wholesaling properties because it's been getting beat up so bad by wholesalers, but Chattanooga is fire. I got long-term vision. I think Chattanooga is going to be borderline second Nashville. Easy.
No, and like I had no idea. Like the developer came to me because we have so many like literally we track every metro area in the US, every zip code, and every census tract. So we're talking about like the amount of queries that you can do. So by the way, we look at any individual area and we have over 88 different indicators. So really, it's like a tremendous amount of data. And when I saw this developer telling, hey, I'm planning on doing this in Chattanooga, I was like, oh my gosh, I had no idea. Like all the indicators were like off the roof.
Moon pies, man. You never had a moon pie?
Yeah, exactly. So it's like you look at all of that and it's like, oh my gosh, there's so much opportunity in so many different places that people, like people just think about Brooklyn, LA, downtown, like Seattle, Austin, but there's so much more if you want to just build growth. So that's and that's what when our data comes to play, we can help you find where's the next Brooklyn, or if you just want to be in a Brooklyn, you can do that, right? So,
if you want the next Brooklyn, you might just choose Brooklyn.
Exactly.
They didn't fix the tunnels yet, did they?
The L tunnel. Well, they decided not to close the L train. So for the people that don't know, Williamsburg is an area that is highly gentrified in New York City, in Brooklyn, and they're about to close like the train station, the subway, which would have a huge impact on property values, and they decided not to. So
they were like, we're gonna just basically close down half of Brooklyn. No, sorry guys, you're gonna have to go all the way over there to find your way across the water.
Exactly.
I think it could have really spawned, the Uber for ferries and boat services, but
Yeah, well, there is a ferry, but it's not as efficient, right? Not that the New York subway is the most efficient one in the world.
Let's talk a few things here. 2 quick questions. One, do I got to be an accredited investor to use InvestReal?
So absolutely. It's a platform for investors on the marketplace where you got development project. You need to be an accredited investor. And one of the big reasons for that is the way the law works, it's really almost tailored for like investors to invest directly into projects, right? Just going to back into the law and some details. From the time you realize your gain, you have 180 days to reinvest the gain to what is called like a qualified opportunity zone fund. Once again, it's just a partnership. It doesn't have to be like a fund the way people think of funds. And the fund has to invest into a project. So the traditional model of building real estate private equity funds, where you just go out, you do a pitch deck, you sign subscription agreements, and, like that usually takes 6 months. And then you got to call all the capital at the same time, but investors have different dates of realizing their gains. Like I sold my business. I don't want to wait for you to do all your fundraising. I need to invest now because I have the capital gains. I have the clock ticking against me. So it's really about investors going directly into projects, and the investors that have the ability to do that, they're usually accredited investors.
Yeah. And do you guys ask for investors to verify like how much money they have set aside or they plan to, to have set aside? And is there a minimum amount to invest to participate on the platform?
So the way we have in our platform is we do verification with the investors and self-verification, we call them as well. Also, one of the reasons we try to verify them is ensure that, like developers want to keep their, like our platform is really a platform connecting developers and investors, and it's a platform about data, right? So we really, like developers are very concerned about not having all their projects out there to competitors and stuff like that, right? Yeah, so we need to do that verification, and we tell developers, this is not a platform for a $200,000 project. The minimal project is like roughly $1 million, like $4 million of total cost, which would it's almost going to be like $1 million of minimal ticket. So it's like we're really looking at investors that can deploy at least $1 million directly in projects.
Got it. So these are not, hey, I just crossed the threshold last year.
Yeah.
Unless you were early Uber or Lyft, I mean, you might have a handful more.
Exactly.
Well, let's shift a little bit. I want to talk about AI. You brought it up earlier. You mentioned AI, and then you mentioned machine learning. All right. First off, what is the role of artificial intelligence with the platform that you guys are building?
No, absolutely. So there's like my engineers, they usually make fun of like if it's the difference between AI and machine learning, right? Like if it's in a PowerPoint, it's AI. If the developer is doing something, it's machine learning, right? So like machine learning is basically a technology of AI. Like for the investors, like people that they're not very well acquainted to the technology, a lot of people, we just put out the word AI. We actually even avoid doing that as much as possible. But some people even call us, and we use like the majority of our machine learning technology is mostly on the forecasting. So using data to, analyze forecasting tools where you have a lot of data and you try to build a model and you try to forecast and the system. But forecasting it's a really small part of what we do, because it's not small. It's a big part of like, let's just say all of the 88 different indicators, it's just few of those. The majority of what we do is really clean data, clean a lot of different data sources, organize it, and compare apples to apples. So like one of the cool things of our system is, let's just say an area has an income of $70,000. Like what we do is we say, okay, an income of $70,000 on a census tract level means that this census tract compared to all the other census tract is on the 15% quantile, meaning people it's basically richer than 50% of all the other opportunity census tracts out there. And this is just anecdotal data, right? Don't take this data. But that's kind of what we do. We literally compare apples to apples. For example, so we one of the coolest things of our system is looking, okay, this opportunity zone has a quality of life of 90. And what does a 90 mean? It means that it's better to live in this opportunity zone, all things equal, than 90% of all the other opportunity zones in the country. And how do we do this? So we use advanced analytics. So we look at, for example, crime data, we look at commuting score, we look at income data, we look at job scores, we look at educational levels. And then we have to we have to use algorithms to score those. And let's just say one factor is very low, you got to adjust those kind of things. So it's let's just call it a smart algorithm. It's not just 1 divided by 5. You got to use those kind of technologies to try to score things, or even crime data. Crime data, it's very complicated because violent crime affects real estate in a different way to pickpocketing data. So you got to build algorithms to understand which type of crime impacts humans and real estate values on a different scale. Because the thing about gentrifying areas is a lot of them, usually they have high crime levels, but they're still gentrifying in the middle of the process. So how do you establish that kind of value? So that's really the value we bring as a platform, looking at this data and cleaning it and organizing and provide clarity. So whenever someone looks into this, they can say, okay, this is reliable. And then just going back to AI, okay, what is the short-term forecast? Okay, we believe this area is still going to grow or not. And how much does this growth represent compared to the other platforms out there?
Yeah, I think you're totally right on that. I mean, that's kind of like when you said different types of crime. It makes me think of Fishtown versus Kensington in Philly. Especially growing up, when we were teenagers, and I was having a sleepover at a buddy's house, but we really went down to Philly for the night. We knew not to we weren't going to Kensington. And now you go through Fishtown, and like you said, you can still see remnants of years past, issues in the neighborhood, but it's been coming up. You got craft brew, you got craft craft coffee, artisan shops and that kind of thing. And those are good signs that, hey, people are shopping here, they're spending money here, they want to be in that neighborhood. And then if there's that ownership component to it, people live in the neighborhood, not just work there during the day, but they live there at night. That can really make a difference.
Yeah, absolutely. Absolutely. And by the way, I love Fishtown. I've got some friends who live there. I stayed at Airbnb, great Airbnb stories out there. Yeah. It was like I became super friends with the guys. It took me biking all the way through.
When I said Fishtown.
Yeah, exactly. I knew. I saw it, it's really nice.
Yeah.
Really nice experience.
It's come a long way. Let's keep it rolling here. We've already kind of covered a whole lot of things that really, I think, paint the picture of, InvestReal is, I think it's just doing something that no one else is doing. So actually, I just want to ask that. Obviously you guys got lucky on the timing. I'll say it lucky. Not nothing against you guys, but lucky on the timing that
absolutely
happened. But why do you think no one else is doing exactly what you're doing?
Well, I think, first of all, you got to look at the way companies operate. Like, if you're a real estate private equity guy, what do? You make money by building funds. Yeah. So if there's a law that says you need to structure an opportunity zone fund, that's what you will do. If you're a crowdfunding platform, you will set up a crowdfunding opportunity zone fund. If you are I think for us, it was really, as a serial entrepreneur and the flexibility and looking into oh my gosh, you got this is amazing opportunity because the market does not exist. It's not it just does not exist. So we have the flexibility because we had a good relationship with our investors, say, hey, this is a massive opportunity. It's almost like a once in a lifetime opportunity. And we as a starter, we got to have the flexibility to say, okay, even though we're making money, we're a fund, we can grow this. Yep. Look at Airbnb and the multiples of Ubers and Airbnb as marketplaces. If we can make this work, the amount of wealth that can be generated and social good through that and the means, it's amazing. So I think we just have the flexibility, and a lot of companies just don't. You see, everybody's doing opportunity zone, what they were doing before with the opportunity zone angle.
I'm a real estate agent specializing in opportunity zone funds.
Exactly. So we were that's why you see a lot of people are, as a real estate broker, you just think, oh, I've got a listing inside an opportunity zone. But a listing in opportunity zone means nothing.
You've ever heard of it?
Yeah, exactly. It needs to be developed a lot. You need to qualify as an investor. So the need is really that's very unique about us. We're not talking about funds. We're not talking about we're just talking about projects that can qualify as an opportunity zone investment. Yeah. So that's what's unique, and we have the flexibility to do that. Definitely, people will catch up, but we hope that we can leverage our position. And
they're running out of time.
Yeah, exactly. Exactly. And we have strong data to not only that, you can build a marketplace, but the other day, a real estate fund came to me with a project inside an opportunity zone, very excited about the project, raising a lot of money for it, a lot of money. And he's like, hey, can I look at your data? It's yeah, as a friend, we sell it, but yeah, I'll let you look at the data, building a relationship. And all the indicators sucked. It was you have 8,700 opportunity zones. We had the ones that you and I, we think there's why are there even opportunity zones? You have the growth markets, and you have the ones shouldn't have even be selected because no money will actually go to there. And this is one of them. But the guy was just excited with the opportunity zones. And he was so I looked at the data you're going to lose your money. And it literally took me, let's just say, a minute to tell someone that was raising millions of dollars that they're going to lose their data, that they're actually going to lose their money. So anybody can build a marketplace, but we've been building our data for 3 years, and that's the complicated part. Connecting an investor and developer is not hard, but ensuring that you can bring transparency into the marketplace, that's the hard part, and we got a good position for that.
That's very cool, because there are a lot of marketplaces, like you said, there are a lot of marketplaces actually out there that already connect investors with developers. They already help investors pull together money to complete projects. There's platforms that will help investors syndicate their own deals and pull together funds, but they don't have the data component specific to the opportunity zones, which you guys have, and that's pretty cool. 2 questions here for you. One, and I'll do these back to back. Will you be using your own tool for your own funds and investing? And then 2, how does InvestReal as a company make money? Where do you monetize this?
Yeah, so as an entrepreneur, you need to focus. So on a personal level, I'm definitely going to use the data to invest. my own money. But as a fund, we're not even focusing our fund. We're all focusing our attention into the marketplace. So how do we make money? Very simple. Investors and developers, whoever want to just pay a full access to our data platform for everything. It's a subscription fee. It's an annual subscription. Anybody that wants to be a part of a marketplace, there's also a subscription fee. And whenever they sign a letter of intent, and the subscription fee is about data and everything. And so we also have some data in there. And whenever the investors and the developers connect, they basically hire our service to provide due diligence on the project, more in-depth due diligence. So we're not operating as a broker-dealer. We're operating as a marketplace that's providing digital consultancy.
Very cool. That's very cool. Well, I love it. I think what you guys are doing is unique. I'm excited to see you guys continue because you've only been at, public offering this for a month now?
Exactly. So we're in a process of if you're a developer out there, please reach out. We're in a process of adding hopefully 20 development projects out there. We're ready to get 10 contracts signed. We already got a lot of projects in our platform. But as a marketplace,
I got some contacts for you. We'll have to get you connected with Tyler Cobble out of Nashville. Absolutely. He was on the show, man, I don't know how many episodes ago, but he's a leading commercial broker in Nashville. So Nashville's got some spots.
Yeah, absolutely. I'll be in Nashville actually at the beginning of May, speaking at a conference. So
yeah, we'll get you connected. All right, we're gonna move on. We're gonna shift gears here. I want to move into the segment that is my favorite. We're gonna play a game called For the Future. Now, also, I would like to preface this. This is the very first time I've actually changed the questions a little bit. I changed one of the questions. I've been hesitant on changing my questions, but I had one, I just didn't like it, and I changed it. So this is the guinea pig. If it doesn't work,
that's okay.
Sorry, everybody. But For the Future is a segment where I get to ask each guest who comes on the show to give their best predictions based on the following 4 questions. Stefan, are you ready to play?
Absolutely. Let's do it. All right.
Question number 1, what does InvestReal look like 1 year from now?
Well, the most successful marketplace in the opportunity zone space. Easy.
Boom. Easy. He said easy. Mark it down. Question number 2, what will the housing market look like 1 year from now?
The housing market, well, I'll tell people you can subscribe to my data. I'm not gonna give you an answer, but it's a very interesting. I'm not gonna give you this answer. You guys gotta subscribe to my data.
All right, we'll get a little bit of an answer out of you. Is it going up or is it going down? Doesn't have to be a crash, but is it going a little bit up or a little bit down?
Well, okay, I'll go into my data. I'll go into the data. So there are definitely a lot of markets that will go up. A lot of markets are going down. And I know it looks like a general, but I just want to say one thing for you guys. Everybody looks at the crash in 08 and just as a crash. And of course it was, but you got to look at it as a localized crash. There were markets in a way that kept on appreciating from the data perspective, held on kept on appreciation. So you can never, especially a country like the United States of America, this massive economy, there's no way anybody can read. I think the time where we read, just a Case Shiller and say, this is what's happening, the economy is gone. I think we got to look into individual, the impact of technology has enabled us to look into really deep dive into the real estate perspective and in a very localized level. Right. And it's so hard. That's why I'm saying I can give you on a market to market basis, but if you look at property prices in the US level, it's not going down. It's not going up much.
Yeah. I think Memphis was one of those that's been flat forever. They've always been on the cusp of it's going to be the next hot thing. And it just keeps staying right there.
Exactly.
I'm sorry. I always rag on Memphis. I shouldn't do that. It's
okay.
Question number 3. What's one industry trend you think will continue, but you wish would go away?
Industry trend you think will continue, but you wish would go away? Well, this is actually a very good question because, I think I'll tell you on the opportunity zone space because that's where I'm in. It's I'm seeing bad actors already jumping into the industry. It's a multi-billion-dollar, trillion-dollar industry that's just being born because Donald Trump signed the law, right? Which is so with big opportunity comes good individuals I believe myself and my organization and a lot of the other organizations I'm involved in, but a lot of people will take advantage on the program, will take advantage of investors. We're starting to see that guys just raising crazy blind pool funds which are not going to work, doing stupid shit, and I wish that would go away because they can bring a bad name to the industry, which is actually creating a social a positive good from the investor's perspective and the people that live in there.
I try to keep the segment purely to your answers, but I'm going to add on to that. You raise a really good point. If what makes the headlines is that a few fund managers took advantage of a few investors because of this program, that's what gets it nixed from ever resurfacing again, or, a second wave or an extension to the program. And you're so right on that. It's really imperative that, we keep things as clean as possible, not just for the sake of our industry, but for the general good.
Absolutely.
Yeah. All right, question number 4, and this is the final of For the Future. What's one thing you believe will dramatically change or fade away in real estate as a result of technological advances?
Well, I think what will eventually, and this is basically my mission, the mission of our company, is to really disrupt real estate through data. Just going back to where we started. When I was investing in real estate, I realized I was spending a lot of money for my private, for my personal wealth into an illiquid asset class without using a lot of data as a decision-making process. Mm-hmm. If you compare it to any other investment you will make in your life, the amount of time and data you will make to support a decision will be tremendous, but real estate, there's not. Like, people just look at few indicators because they think make sense and they invest in money. I believe that data, exactly. They just look at cap rate, exactly. And everybody says I've got a great reputation, and like what happened in 2008, what happened to your reputation? If you're so good, why didn't you see it coming? I'm not saying that data will see it coming. I am saying data will see it coming. I am saying data will see it coming. Yes. And
is that machine learning or artificial intelligence?
Exactly. Or advanced analytics or big data or robo trading, right? So yeah, I like in the future, I really hope that nobody will make any investment decision without looking at the data supporting that. Because a lot of people think, the crash in 2008 was terrible. It was really terrible for like the people that spend their money on and gave it to a pension fund that lost their savings. Like, that's ultimately, a lot of people just look at rich people getting richer when they think about investors. But ultimately, people like an investor, if you're very wealthy, you lose your money, you don't care. But if you're not very wealthy, if you lose your money, you're screwed, right? And
I'll tell you what I was doing. Exactly. I left a home builder. I was working at the largest privately held home builder in the tri-state area on the East Coast. And I went to college, which was a terrible mistake, by the way. But that's a whole other story. But, people, like you said, people talk about the rich getting richer. Let me tell you, I was on a student budget, working 2 days a week at Panera Bread. And I found out that I could borrow over my student loan allowance by a certain percentage. I took the money and I shorted Chase Bank, and I shorted them hard, and I made some money on that. So, everybody else could talk about what they wanted, but I paid my bills by shorting the big banks who were failing. So if the big banks want to fail again, good on them. Let's do it.
Exactly. So yeah, hopefully, the time of people just using gut as a decision-making process, I hope that's gone.
Yeah, very good. Well, let's move on to the last 3 here. This will be a part of the show where people get to learn a little bit more about you. First one is, what are you reading?
So I just finished Blitzscaling by Reid Hoffman. And so it was really cool because the Blitzscaling is a story. A lot of it is Airbnb when Airbnb was Blitzscaling. So it's really cool when you see and then Airbnb opened up its offices, and I was a guy in charge of Sao Paulo. So it kind of felt my contribution to the book. It's a great book. I gave it to my team. Say,
are you quoted in the book?
No, I'm not quoted. I just
there. Come on.
No. And so I just finished reading it. And by the way, today I got the book from Brad Thomas, who basically he wrote The Intelligent REIT Investor. So that's the book I'm going to read now.
Intelligent REIT Investor.
Yeah, Brad Thomas, he's an editor at Forbes. So I had a meeting today, and he autographed the book for me. So that's going to be my new book.
I'm writing that one down because that is the topic I'm interested in right now. So investor, good stuff. I'm gonna add that to the list. Question number 2: who are you learning from?
Well, the person that taught me a lot about just being a good individual, definitely my father. My father's a successful entrepreneur that came out of nothing and taught me also the value of personal development. He never gave me any money. All I had to do, even though I had to do everything by myself, and he taught me a lot. Also, one of my good mentors is a person by the name of Glenn Lowenstein, who's also my board member and also one of my business partners at InvestReal. So Glenn Lowenstein is the founder of Limestone Capital, $6 billion real estate private equity group. It was sold at 2017, and he's like one of the smartest person I ever met as well. And I have the honor to have him as a mentor, as a board member, and as my business partner.
Very cool. And the last of the last three here, what inspires you?
Well, I think what inspires me is really it's really the chance of building something that can actually be meaningful in life, right? So as an entrepreneur, I'm never really focused in money. Like money was never part of any decision making in my life. It was really about the impact of what I can do in this world. So that's really what inspires me. And I love the chance of working with this opportunity zone space because, there's a combination of a lot of great things. It's the combination of being able to build businesses, which I love, and the chance of being very successful in them. There's a combination of building just generating social good through it. I really believe that there will be economic development through the program, and people, their lives will actually see that. And I love the fact that, I can track that through data and not go into a discussion where you have like one side of the aisle saying it doesn't work, the other side of the aisle saying it works. Hey guys, your discussion, it's the data that matters. So I hope that in 10 years, there won't be a discussion. There will just purely be a data analysis.
Very cool. This has been great. I appreciate your time and going as far as in on opportunity zones. I mean, we've had a few people bring it up on, past shows. I actually learned about opportunity zones, for the first time, last year from one of our guests. And there's so much ambiguity out there. So, it's good to hear someone go in on details. And I think what you guys are doing is really cool. There'll be very few times I think we'll see where it'll be such a specific opportunity in investing and someone will have just so happened to build the tool for it.
Yeah.
Like you guys have. I think it's so cool that lines up. Before we head out, I want to give you the opportunity if people want to connect with you or learn more about InvestReal, or if they have questions about opportunity zones, where do they go and how do they do that?
Yeah. So please go to InvestReal.com. So InvestReal, like as REAL.com. Go in there. You can sign up. Anybody, you can just connect with me on LinkedIn. I've got there's a very unique name. So Stefan Schimenes. There's no two of us. You won't have any hard time. You will have a hard time writing my name correctly, but you won't have a hard time finding me on LinkedIn. You can just type in InvestReal and CO. You'll find me. Please connect with me. And finally, if anybody has any questions or anything, do not be afraid of reaching out to me directly. My email is my first name, Stefan, STEFAN, @InvestReal.com. So just shoot me an email. I'd love to connect with you.
Very awesome. Yeah, we'll put that in the show notes as well. So it's real easy for people to get on the TechNest website. But really appreciate your time. Thank you so much, Stefan. And, if you feel like sharing with me that next hot city, you want to give me a little heads up, I'm not going to tell you no. I won't turn down that email. Okay.
Okay. Absolutely. Okay.
All right. We'll catch you later soon.
Thank you. It was a pleasure. Bye-bye.
Well, that's it for today. Thanks so much for listening to the TechNest podcast. Hey, don't forget you can get on the email list so you never miss an upcoming episode. That's technest.io. That's TECHNEST.io. Get on the email list. Go to the App Store, whether you found us on iTunes, Stitcher, SoundCloud, wherever you found us. Leave us a 5-star review and share it with your friends. And if you've got a guest or someone that you'd like to recommend, or if you think that you'd be a great guest on the show, hey, send me an email, Nate@realteampanda.com. That's Nate@realteampanda.com. See you guys later.